and welcome to State of the Economy. I'm Ritu Singh. Now, India's retail inflation for the month of April came in at a 13-month high of 3.48%, which is below the CNBC TV18 poll and still below RBI's own quarterly target. Now, this compares with about a 3.4% in March. Core inflation remains relatively stable at 3.4%, while fuel and transport inflation stayed muted thanks to stable petrol and diesel prices. The data also now shows that restaurants are getting more expensive as the LPG shock slips through. Rural inflation continues to run hotter than urban inflation, with the gap widening further in April, and meanwhile gold and silver prices are still a major pressure point, even though precious metals inflation has cooled slightly from the levels we saw in March. But to take this discussion forward, we're now joined by Devang Shah, Head of Fixed Income at Axis AMC, Aditi Nayar, Chief Economist at ICRA, Sakshi Gupta, Vice President and Senior Economist at HDFC Bank, and Sameer Narang, Head of Economics Research Group at ICICI Bank. Ladies and gentlemen, thanks very much for joining us here on the program. Sakshi, to start with you, quick thoughts on the number 3.48%. What have you penciled in, and does it change your estimates for the full year? Sakshi, I think you're on mute.
Sorry, yeah. As I was saying, this number has come in below our expectations. We were penciling in 3.8%, so clearly, close to 30 basis points lower than what we were anticipating. I think this kind of confirms the fact that starting point for inflation remains very, very comfortable. There hasn't been any pass-through, of the higher, oil prices to retail consumers. So the story on inflation is looking good now. But I don't think that this completely changes my view as to where inflation is heading going forward. We are estimating that, inflation could end up closer to 5% for FY27. I think there are a host of risks, including, any pass-through on the petrol and diesel front, also El Nino, which could cause a bit of volatility. So good news for now, but I think the risks are clearly stacked on the upside for inflation going forward.
Okay, Sameer, would you call the number benign, and would you even go on to say that this is the last of the benign CPI numbers that we've seen as the full effects of what's happening in West Asia and the energy price shock feeds through the system?
Ritu, as of now, this number is on the back of the fact that very little pass-through has happened. And even in this month, if the pass-through is limited, then you would continue to see slightly below the normal level, which you would expect with a price hike, inflation trends continuing for some more time. Once the price pass-through in retail prices is visible, you would definitely see perhaps, a 30 to 40 basis points jump, which is direct, and then the indirect, play out will happen. It also depends on the quantum of hike. If you have a 5 rupee or 7 rupee hike, you should see a material pickup in inflation, going forward.
Okay, Aditi, your quick thoughts as well. What had you penciled in versus the number that's come in? And perhaps the only place where we can see some bit of a pass-through on account of LPG prices is the restaurant inflation. That stood out. Anything else you'd like to highlight?
Yeah, so actually our forecast was 3.9%, so we were fearing a much higher number. So this definitely is quite a lot of cushion and relief in terms of, a very marginal increase from 3.4 to 3.48%. So that's really good news. Our sense is that based on what we know for food prices so far in this month, and presuming that we don't have any increase in petrol or diesel prices in the next, let's say, foreseeable future, or let me say not in this month, even then we would expect to see a jump to around 4.1% in the headline CPI inflation for the month of May. That's broadly the kind of number that we're looking at. So while this would be a largest jump, it would still be only around the midpoint of the band for the MPC. So it's not going to be an alarming number in the immediate term. And after that, as Sameer said, firstly, when any hike in petrol and diesel prices happen, what is its quantum and how quickly does it start to be passed through into other items? All of this will define the next few months of the CPI trajectory. And then the El Nino, the monsoon itself and the impact on food prices will be the next sort of trigger over the subsequent quarters. That's broadly what we're looking at. The range of possibilities this year for the CPI inflation average is very, very wide, depending on how long the war lasts, how long crude oil prices stay elevated, what happens to RSPs, and then what happens to the food side. So it's very difficult to really give a baseline at this point in time. But yes, today's number at least has come in as a relief, and we are expecting a jump in the month of May.
Let me ask Devang that. Devang, the numbers are actually a little better than what most of the economists had penciled in. We're hearing it here from our panel as well. Do you think the bond markets will show any of this relief, from the 7% plus kind of yields we've been seeing the last 2 days?
Yeah, Ritu, you're right. Probably that the inflation number has come a bit benign than what market was expecting. But as I think most of the panelists spoke, we are actually looking at, specifically the bond markets are looking at two or three issues. One is at this point of time is that the overall CPI trajectory, and specifically because bonds price in what's the future outlook on CPI, is not good. And yes, broadly it can be 4.5% to 5%, but largely the expectation is that inflation will be on the higher side in H2. Secondly, the more important concern which I think markets are now grappling with is that what can be the increase in fiscal because of all of these, the crude prices being so high, and what can be the increased supply on bond markets. So both these problems are leading to, I would say, the bond markets not hearing the near-term number and probably looking at more the trajectory on what will happen in future. The other important point is that liquidity still is comfortable, though the short end of the curve has significantly, yields have gone up. But liquidity in the banking system and the durable liquidity is very, very high. So in the near term, there cannot be any open market operations also which can provide somewhat of support to the bond market yields. So I would say, yes, trajectory is okay. The near term on CPI number is good, but the medium term concerns are outweighing, and that is why we are not seeing any kind of relief in bond market yields.
So near term, Devang, any levels you'd like to highlight for us? I know there are various moving factors, but based on the data that we currently have and what the bond markets are pricing.
So, Rituji, our understanding is that till the policy, if this conflict continues, okay, markets will start worrying about that August onwards, every policy will be live for rate hikes. Because I think most of the panelists spoke about H2 inflation as per us is going above 5%, and you cannot have the repo rate at 5/4. So the view across is that for me that near term, yes, bond market yields will trade in a range. Yes, 7%, I would say on the downside, if there are any kind of respite on this ME conflict, probably it goes to 690, and on the higher side, 710. So that's the band for the near term. But I would say that every day the crude prices stays above 90 and all. The worry is on the fiscal math, the worry is on CPI trajectory, and hence I would say the worry would be that what kind of rate hike gets priced in. Our concern is August onwards, market will start pricing in those rate hikes, and probably H2 you might see yields higher than where they are currently.
Okay, 6.9 to 7.1% kind of a near-term level. Sakshi, let me address that oil concern with you. I mean, OMCs are holding on to huge losses. Yes, there was that royalty cut news that we got this morning, which could help to some extent. But what kind of fiscal shock are we looking at? If retail prices do eventually get passed through, what happens to these headline numbers? What is the base case you're working with, and what is the worst case scenario you would pencil in?
Right. The worst case scenario at this point can be anything. I think it is very difficult for us to kind of pencil in or talk about numbers from the worst case scenario. But, our base case on inflation is close to 5%, where we are saying that, look, oil price is around $85 per barrel on average. If we do see an increase in petrol and diesel prices, close to, as Sameer said, 5 to 7 rupees, the increase in my CPI forecast would have to be close to 40 to 50 basis points. And on top of that, I think, as I said, on the El Nino front, we really don't know how that's going to play out. I think on cereals and pulses, food supply or volatility might not be a concern because we are coming on the back of very healthy harvest from the last season. But for perishables, things can become very, very volatile. So in my base case, yes, I agree. I mean, we are looking at 5 to 5.5 right now for second half of the year. If, an adverse scenario where you do see a pass-through happen on the petrol and diesel prices in El Nino, then I think it's a possibility that you might even get 6% in a particular month in the second half of the year.
Oh wow, 6% is a number I've not got so far. That's quite the worst case scenario you're painting. But Aditi, very quickly, El Nino, since Akshi brought that up, the prediction for monsoon is not looking really good right now, and that El Nino playing out through August, September, etc. While we can't really preempt what happens historically, what do we know? Below normal monsoon, what does that do to food prices, say with a 2 to 3 month lag?
So there's a couple of different things, that I just want to talk about. See, first of all, if we still assume that the base is going to be $85 per barrel for crude, then perhaps we should be building in the fact that after a couple of more months, it's going to come down to $80 per barrel by, let's say, July onwards. Now, in that case, the fisc may absorb a lot of the pain if it's going to be short-lived. Okay, so you may have an impact on the fisc, but you may not necessarily have too much of a pass-through going into the inflation side and into the growth side. So it is a matter of timing. But if you're going to have prices remaining at the current 105 sort of range for a prolonged period of time, then I think a price hike would be inevitable. So instead of the impact being on the fisc, it would shift, it would get transmitted into the growth inflation dynamics instead. So that's something, it's all moving parts for speculation from our side at this point in time, whether it's going to be the fisc that absorbs the hit or it's going to go into growth inflation. Our baseline forecast, if we say $85 per barrel, for instance, I would not expect CPI inflation to be that high, because crude oil price would have to fall back to $80 per barrel sooner rather than later, and therefore the impact on H2 inflation may be more protected. Now coming to El Nino and rainfall, see, every few years on average, every 3 to 4 years, you do end up with an El Nino. And you do end up with some amount of subpar rainfall. In the Indian context, a couple of things really matter. One, of course, we're sitting on very healthy reservoir levels right now, which should help us in terms of reducing the dependence on the onset of the monsoon being very timely or very healthy. My sense is that two things are going to matter a lot. One is what is going to be your rainfall in the month of August. That is really the critical month where most of the sowing has been done, and that's really when you need a lot of moisture. And the second is, how is the dispersion going to be over the core rain-fed area of central India, below the well-irrigated parts of India. So this is what is going to define. When we look at the historical numbers, depending on the strength of the El Nino, whether it's moderate or very strong, the outcomes on agriculture can be extremely different. So there is no average that we can really look toward. The only average I can give you is that every few years, statistically you end up with an El Nino, and this year we were kind of primed to get one anyway. Now what is going to be the strength, and how is the timing of the rainfall going to get affected, how is the geographical distribution going to be affected, that will have a bearing on what our agricultural outcomes are going to be.
Okay, let me quickly then get a response from all of you on how we put all of this together in terms of what RBI does in the first week of June when the MPC meets. With this kind of a number, I mean, RBI's own CPI inflation, I believe, is for the first quarter 4%, second quarter 4.4%, third quarter 5.2%. I mean, that way we get to negative or flat real rates by the time we get to the third quarter. So, what is your expectations in terms of a pause or a hike, starting with Sameer? Would you want to come in?
I think so they'll have enough evidence to do anything. In terms of El Nino also, since 1980, you had, four very strong El Nino forecasts, out of which 3 have turned into, below normal rainfall. But only if rainfall is, 12 to 14% below the average or normal, does it lead to a material increase in inflation and deterioration in output. And the average increase impact on inflation is around 40 basis points, is what we've got, and it's very similar to what the RBI has, penciled in its study. So if that plays out, we'll know only by perhaps July and August. Only then they'll be able to, put that into a framework of having an impact on inflation and then deciding what the best policy response should be. So I think they'll have to wait to get more information before they can act.
Devang, very quickly in 30 seconds, your expectation on the next RBI move?
Yeah, I would say a pause in June, sound hawkish and cautious, and somewhere down the line from August policy, every policy will be light for rate hikes.
And finally, Aditi?
I think status quo with an abundance of caution.
Okay, Sakshi, I'm going to get to you in just a bit. We have to take a short break, but let me also thank Devang and Aditi for being here with us to help decode the CPI numbers. Sakshi and Sameer, do stay on. We'll return after this very short break to talk more on the rupee, which has hit a record low today. Stay tuned.